This Fibonacci retracement trading video is going to be simple and very powerful. You are going to use this and improve your win rate after watching this video. So basically, it's usually good for swing traders and day traders. So if you are a swing trader and a day trader, then this is for you. Alright, so the first thing you want to understand when it comes to Fibonacci retracement is to first of all know the settings. This is the setting I have on. Feel free to copy my settings. Alright, so I'm going to give you some time to copy it. So copy my settings. I have 0, I have this, and this, and this. So you can pause this video and copy this and flow along with me. All right, now that you have your settings ready, first thing you want to understand is market structure. So market structure is king when it comes to Fibonacci retracement level. You really need to understand exactly how to identify market structures. So for instance, we see that when price kept moving this way, all right, so all these are consolidation. Fibonacci retracement strategy will not be effective in market condition like this. Right, so you want a market condition that has swift movement just like this one. That's why it is called a retracement tool. Until you understand the retracement principle, you will not be effective trading the Fibonacci strategy. So first thing now, we want to identify swing points. So let's first of all identify swing points. So we have this a swing point, and we have this, and we also have all of these as minor swing points. So we have this, and this as well. Okay, so these are swing points. Now, it is very important that you understand this on the time frame. So two things here. The first thing is you can use this basically strictly on the 4-hour time frame. Otherwise, you can use your 15 minutes or 5-minute time frame. Basically, it works for any time frame at all. It doesn't matter the time frame you are trading with. All you need to understand exactly what I'm about to do. So you see, if I pull this fib from this to this zone, this is 4-hour. So these are the sweet spots we are going to be talking about, right? Don't take your trade from the 50%, right? This is yet another concept, right? For those of you who understand the PDR concept, which is premium discount, and this is exactly what we have. In other words, if price comes and price, let's say we are seeing movement of price like this, we are not interested in selling in any of this zone, right? Until price tap at least into this 15-minute zone, into this 50% rather, until we can start looking for sales. All right, so this, in this case, this becomes a premium, and once it comes to this blue zone, it becomes a discount, meaning we are ready to buy from anywhere here. Okay, so this is very important for you to understand. But in this strategy I want to share with you, it is important that you don't trade from just the 50% per se. Don't take your trade entry from the 50%. All right, so you want to trade from at least the 62% to 79%. All right, now there's another thing, another catch here. One of the things you really need to understand about this is how to draw your fib. So say this is your point, your swing point. Let's say these are your levels. We have this, and price, this level have been broken. So we have something like this. Now we are not going to draw our fib from here to this place. Why? Because we don't know, price can just continue like this and keep going up. So if price keeps going up, you keep pushing your fib alongside with price, right? So if price comes and creates a new low, right, and goes up, this becomes a new level that you want to draw your fib from. Now let me show you a perfect example. So as in this scenario, this is not a perfect fib point, this is not a perfect fib level. All right, this is not a perfect fib level. All right, so for instance, one of the reasons why we say this is not is, you see, this is not a valid pullback. I will show you in the chart in a moment. This is not a valid pullback, and basically this is where we are looking for entries, right? So for us to see, for us to actually pull our fib in the first place, you want to see a valid pullback. And how can you identify valid pullback? You identify this valid pullback on the 15-minute time frame. So if you are in the 4 hour, you want to see 15-minute time frame change of character. All right, you want to see something like this. So in this case, we can boldly draw our fib from where we're going to pull our fib. If price is bullish, you pull your fib from down to top like this. If it's bearish, you do it opposite. All right, so this is exactly what we have right now. So we have this zone. These have confirmed the pullback, so we can now take this as okay, price is retracing, so we want to take our trade. Now if you must use this one, then you have to understand what price did after this level was broken. I will show you in a moment in the chart as well. All right, so let's go to the chart right now. So this 4 hour time frame, you see, if we pull our fib, remember, if we go to the lower time frame, 15 minutes, you will find out that somewhere here as this is where the retracement starts, somewhere here, I believe, right? And on the 4 hours, you can use the same strategy. On the 4 hour, you simply wait, especially on the time frame you want to pull your fib, right? You just have to wait for what? You have to wait for a shift in trend or a change of characters. You just need an indicator that okay, price is about to move. So we'll go to the 15-minute time frame. On the 15-minute time frame, this is exactly what we've got. So on the 15-minute time frame, we're going to clear this off. So work with what we have on the 15-minute time frame. So first thing first is what? You mark your swing point. Understand the swing point. So in this case, we have this and this. All right, all these are minor swings actually. So we have this, and this, and this, and this. All right, so all this, this is not a valid pullback because this is a single move. So this is not a valid pullback. It is not valid. Why? Because it's failed to break this high. So until certain high is broken, so you have to see a break of market structure first. So now we have our break of market structure here. So since we have our break of market structure here, we can actually look for our pullback. All right. So basically, how can we do that? It's quite simple. We pull our fib from this point into this point, right? Into this point. So basically, our entry, we have to be here. All right, we have to be here. This is our entry, and all these are a bunch of liquidity. Remember, you could actually look for entries on the 50%. Right, especially if you see a valid order block inside the zone. All right, so the thing is, any of these areas you are seeing the 50%, 62 retracement, 79 retracement. If you see these two things, then feel free to enter your trade from there based on confirmations. Okay, so first you want to see a fair value gap. Secondly, you want to see a valid order block. In this first case, which is this 50% slash 62% level, which is this window, this is the entry window, right? So in this case, your stop loss will have to be somewhere below. Yeah, your stop loss will have to be somewhere below that order block, and your first take profit will have to be the high that you started drawing your fib from. All right, so that should be your take profit at least. Okay, so in this case, this is exactly what we had, and well, let's play price forward to see a more entry opportunity. Okay, so we have this. So as price keep going up, what you do is you can actually pull out your your fib to that high, right? And this is the same zone. These are the zones we're looking for buys. We're looking for buys in this area. So basically, you just have to put in, you can use 50%, all right, and your stop loss can be depend on the time frame you are trading from and your risk appetite. Okay, but this becomes the safe zone. This is a safe zone, and your take profit will have to be this high, right? At least your first take profit will have to be that high, right? But you can as well use this method. Just allow your stop loss to be a little bit, because if price crosses this zone, that might be invalidated. All right, so you might do something like this, targeting this same area. All right, so this 0.38 could be your first or your break-even point. It all depends on, like I said, your risk appetite. All right, so basically you can do this. Now the reason why I'm not going to pull this as my fib, I know most of you will pull this as your fib. This is not valid. Why is it not valid? This is a single pull, a single push. All right, it is not a valid pullback. It's all single push. Okay, so that's something you must understand right there. All right, so let's play price and see how far we go. Okay, so you see that there are a few reaction there, but like I said, we are not interested in taking any trade from that point, and I already explained the reason, right? Please, price should, so if price gives us our entry rate, otherwise we simply wait for a mitigation of our, we have a perfect tap into our entry point, and let's see what price is doing, and we see a massive push to the upside, wonderful, right? So first, we now have our take profit have been hit. You see exactly, very precise. You can get sniper entries using these models, okay? And this is very good, especially for swing traders, right? For those of you who are taking trades on 15 minutes and 5 minutes and 1 hour, it is very, very important. So another thing we want to do is we also want to fib. We simply have to remember valid pullback, so of which we already had. So we have a valid pullback of this zone, so this becomes our change of character because we have that as our inside bar. So now that we have our change of character on, we can now pull our fib. So this time around, our fib we have to be from where? From this to this, right? From this to this. So if price decides to take this high, we have to pull our fib along and flow along with it. Otherwise, we just stay put. So in this case, we have what? This is a valid zone. We can look for entry, and there's yet another another thing I want to show. Okay, so let me show you something else. So just click on the fib, double click on it, go to the settings and enable this. Just change this to where are you? We're going to put 90, so just simply change this to 0.90. all right, just enable that on. So we have this level, we have another fib zone, so this becomes another level we might look for entry. So basically I will be interested in taking my sells, my buy, because remember we and your stop loss, you just have to be a little bit below it. And where's your take profit? It has to be where you are coming from, all right, where you draw your fib to, at least there. And this first take profit, we have other take profit right here. Okay, so you can take this first, second and third take profits. So depend on the kind of trader that you are. Okay, it is very important. It is very, very important. Okay, so at this case, in this scenario, we just have to simply wait for, you can go to your entry time frame and look for, your entry confirmations. Otherwise, we are good to go. Okay, so let's see what we have. Let's play price. So at this point, we're actually sitting on our ends. We are patient. We are patiently waiting for what price is doing. We're not engaging. So if you want to from here to this, then you have to go to a lower time frame, lower than this actual time frame you have drawn your overall fib. So in this case, you can just go to 5 minutes and look opportunity into at least into the 50% area, right? Because most likely you are going to see some reactions right from there. Let's see. So this is my entry. Okay, so all these are now liquidity, and liquidity. All right, so let's see. Okay, all right. Okay, so let's play price. All right, so don't allow your emotion to to creep in. Have your strategy in mind and you will be safe. Okay, it is very important. Let's see. So I've been tagged in, so we have a nice reaction. So if price takes out this high, breaking even would be good. So right, can break even. Okay, or you simply wait for this orange, level, which is 0.34 level. Otherwise, you just wait. Okay, so this is the end result. So you see exactly. So we have TP have been hit, and boom, more liquidity have been created. All these are bunch of liquidity, right? So once you have this set up, please go to your chart and do some study, right, to see if this is something you can apply to your current strategy. Peace.